Good afternoon to you, Draftworx supporters. It's wonderful to have you online again. My name's Shane Webb and I'm your technical host. You should be seeing three friendly faces on your screen, mine and Matsebo's and Joni's, and I'm going to be handing over to them in a couple of seconds. A big thank you to Clarissa, who schedules these events every year. Welcome, and then over into your very safe hands, Joni and Matsebo. Thank you guys for all your preparation and everything. I know you've spent many hours getting this all ready for today. So thank you for that, and over to you.
Right. Good afternoon, everybody, and a very, very warm welcome from us here at Draftworx. And we are wrapping up our series with RAC today. Right. So for those of you who do know, yes, that is our awesome audit methodology. And well, for those of you who do not know, well, that is going to be your favorite new work buddy. Right. Now, we will be doing a RAC introduction today. All right, so we are not going to go through all of the working papers. We're only going to touch on a few of the key documents. All right. If we do all of the working papers, probably you're going to sit here all week, and that's not really the aim that we want. All right. We do also aim to be done in about 2.5 hours. We do plan to be done a bit more quicker. So please just remember that we should never ever rush our audits. And we would really like to discuss a few key points with you today. All right. So please just bear with us. All right, then, okay, so we are just saying hello once again. As you know, Shane is hosting us. Shane, thank you so much for tolerating us for the past month or so. I think we won't be able to do this without Shane at all. Thank you so much for sending all of those certificates in on time. I think this year has been extra quick, and thank you so much also for assisting on the recording. As you know, you will get me today. I am part of the template development team. And then as well as Matsebo is also going to assist on the Q&A in the background. And also she's going to go through a few working papers as well. Now, just a little bit of an introduction to Matsebo. She is a part of our support team. She is one of our RAC experts in the support team. So most likely, Hi, Matsebo. I was just about to ask her to switch on her camera, but most likely, if you ever got assisted with a RAC query, probably Matsebo was the one to assist you. So it's always nice and good to put a face to the person that's going to help you. So always thank you, Matsebo, for all the awesome work that you're always doing. All right. On the Q&A, Matsebo is going to answer all of the RAC questions. If there's something a bit more technical, please just leave your email address with, then I will come back to you during the week. All right, so please also bear with me on that. And then Clarissa is going to assist on the sales-related queries. And if there are questions about RAC she can answer, she will definitely answer it. But also thank you for Clarissa for facilitating all these webinars for the past month or so. Also, without you, we won't be able to do this. Then a person that's not on this slide, I would really like to thank as well. We just like to thank Sharwin as well. Sharwin did assist us with all of these lovely slides. So you will see this year, it looks much more vibrant than we had last year. And that is just because of the wonderful patience that she had with us, especially with me. So thank you, Sharwin. Next up. Keep in touch with us, please. We do also have a YouTube channel, as you know. We do load all of these webinars to the YouTube channel. And also, especially regarding RAC, we have a nice series that we did a year or two ago where we went through each and every working paper. All right, so please go and watch the videos if you do get stuck. Alternatively, you can email us. You can get in touch via support. You can phone us. So if one day you have a bad day, maybe you want to have a chat with one of the consultants, please feel free to also chat with us. All right. Then please find us on social media. So sometimes you will see there's a bit of a comic relief going on there. It's super funny sometimes. So if you're having a down day, just run through our social media and have a look what's going on there. Also, please, any feedback that you guys may have regarding the software, the methodologies, anything that we can do better, whether it's negative or positive, as long as we get feedback from you guys. All right. So please just go wild with it and get in contact with us. So that is the major thing. Okay. Before I dive into RAC, I just want to touch on the standard for less complex entities. Now, for those who are not aware, in late 2024, IRBA did indeed make the decision not to adopt. Okay, so they are cutting us a bit off there. So as a result, the ISA for LCE will not apply to the audits for South Africa. But now, what happens to when you feel stuck on RAC and you feel like there's days and days and days of documentation? Well, in these cases where you do have a less or complex entity, a less complex or a smaller entity, there are some ways of reducing your audit work just by using your professional judgment. So we did put together a video for you, which is on our YouTube channel. So for those quick fingers, probably the younger generation has already scanned this thing by now. For me personally, I would have looked for my QR code for the next 10 minutes, but please scan it. We will be sending out the slides as well, so you will have the QR code, but please go and have a look at that video that we made on how you can perhaps look at reducing the audit work that you will be doing for your smaller clients. Okay, now what does this mean for our international clients? Now, from a Draftworx perspective, before we start developing, we need to take a little bit of a step back and just check on a few factors. So we must assess whether the integration with RAC is going to be feasible, whether it should be its own methodology, if there's any market demand for it. So we need to look at all of those factors. So please, if you are an international client and you do feel like you're interested in something like that, please get in contact with us via the various ways that I just showed you. We need to know if you are interested so that we can start thinking about developing something like that. Right. Okay, now that the serious stuff is out of the way, we can get to the good part, which is RAC. That is, after all, what we are here for. Right, so I am very excited today because we have rolled out some updates over the weekend. So yes, while you were relaxing, we updated some of our working papers. Right. We made a few small tweaks on 1505, which is our risk register. There's nothing scary, just a small section that we removed. On 1605, though, some of you hopefully are going to do a happy dance. Based on the feedback that we got from you over the past 2 years, we did go and change that working paper to accommodate those feedback as well. Then we have introduced a brand new working paper just to handle the standback evaluation requirement. So I will be going through all of it a little bit later as well. And then finally, on 0605, which is in finalizations, just our audit sign-off control sheet, we did make a few minor updates, and that is mainly to support the new standback evaluation working papers. Okay. Then, lastly, just a quick shout out to Damien and Zalian from the template development team for collaborating to make these updates happen just in time for this webinar as well. So thank you, lady and gentlemen, for working also hard on the release of that update. Right, now what is RAC, right? What does RAC stand for? Well, it means risk assessment per component. So it's as simple as that. Remember, we are following a risk-based approach and therefore the name. All right, so before we dive into the key working papers, there are a few standard things I would like you to know that's going to be super helpful before you're starting RAC. Now, I am going to hand over to Matsebo, who's going to walk you through those standard things, and she's just going to highlight some of the key things that you'll see on every working paper. So it's basically the stuff that's really helpful to know before you dive in, and especially if you are new to RAC. So I'm going to stop sharing my screen, and then I'm going to ask Matsebo to take over.
All right. Thank you, Johnny, for that. Good morning, Kwamore. Good afternoon, Ndi macheroni, masiari, dumelang. I'm Mativo, as Journey did share with you guys. Okay, so now the next part that I'll be covering before I hand over again to Johnny, it's the RAC colors, right? So we have different RAC colors. So I'm just going to explain some of them while I'm also going to demonstrate to you or show you what I mean as I explain. So we have dark gray, which is our headers. So this is our headers or our action steps. So we are more familiar with this. You have your action 1, action 2, and this is the dark gray, which is our header and action steps. And then we also have our light gray, which is our second header, the questions, if any, or the ISA requirement, right? And then we also have our light blue. This is our light blue colors. And there's also blue, which I would say that it's a dark blue for me, which is our roll forward input cell. So I'm just going to quickly go to working paper 1115, just so you can see how the dark blue or the blue looks like. So this blue, which is your dark blue, and also your light blue. Light blue, your input cells, and you have this blue, which is your roll forward cell. So I'll come back and explain what a roll forward input cell is all about. Okay, so then we also have our yellow, which is the required input cell. So within any working paper, if there's a yellow, it means that there's information that you do need to input and that's missing. So that's always a sign as well. If something isn't working that it should work, then you always look for your yellow cells. And we also have our incorrect input. That is the red color. So I'm sure most of you have seen it either on working paper 1800 or some of the working papers that we might have here, which I will just try to quickly demonstrate for us. I'm just going to open 1002 just so I can show you what a red would look like. So I'm just going to set this back. So if I come here and I say I'm inputting something, so this is my red cell, which is an incorrect input, or sometimes it might be just the system telling you that the information that is pulling from another one is incomplete or it does not agree to your audit plan, right? So then if I go back to 10, we also have our white color, which is just an automatic calculation result. And we have our 10 color, which is a little bit of an orange. So this is the color that I'm talking about, which is our information and warning message. So those are the RAC colors that we have on each RAC working paper. And lastly, just to explain the little drop downs that we have on actually all our working papers, we do have this drop down here, which just shows you our rights copy issue message. And also if you go on here again, it just tells you the name of the engagement, the client, just the summary, and also if there's anyone who has signed off this working paper. So those are the items that we have when it comes to our standard RAC colors. All right. So as I've explained all the colors that we have, so now we can see that on this one, we do have a yellow. And if I go and select whether it's a new engagement or a continuing engagement, it quickly then turns into blue, which means that I have done what I'm required to do, as it is an input cell, and now that has been cleared. And I will just continue to scroll down. So some of the items that we have on our working paper, we do have hyperlinks that lead either to the next working paper or it might lead you to the next tab, right? So I will quickly go over down here. So the perfect example that we have here, it's this on action number 12, action 1, paragraph 12, which says there must be an EQR performed prior to audit report. So as you can see, it's currently at yellow and it's asking you to complete 10.0.03. And we do have a hyperlink to easily make it as efficient for you, where you can quickly go into that specific tab, and then you make sure that you have completed the items that need to be completed in here. So I'll just quickly do a hover over for you, just so we can see how then that changes on our 10, the first tab that we have. So if you check here, then that has changed into white. So that is, remember, white is our result or just the basic information that we have in there. Okay, so now I'm just going to go back quickly into our 10 color, right? So this is the information or a warning message. So in almost all our working papers for RAC, if you see this information in there, it's going to inform you what you would need to do on that specific working paper and what you can't do. Or it might tell you that before this item is pulled over to the next working papers, the partner needs to sign off. So please always look out for this, because it will always just show you and indicate to you that there is information or warning regarding this specific working paper. And I'm just going to quickly go over to our Bible, as I always say. And Johnny did say that this is our Bible, which is our guidance. So this is your BFF. Remember, at Draftworx, as much as we do have the RAC and we're giving you all the information to make your audit as efficient and as electronical for you, we do not leave you hanging. And that's why we have the best support, but we also give you a guidance in terms of completing that specific working paper. As usual, as any auditor, we always, when you perform a procedure, there should be an objective to that specific procedure. So we do line out the objective. We do also add a link to that, to the training that is there on YouTube for that. And if you scroll further down, all the actions have been explained for you. So do take time, especially if when there's someone who's doing an audit for the first time, please just always advise them to go into the guidance so that they can familiarize themselves and understand the whole point of completing this working paper. So lastly, on the guidance, if you scroll further down, we do inform you of the ISAs that are being addressed. So this is the perfect part, because now you're not just performing this audit aimlessly. There are standards that you do need to adhere to, standards that you do need to fulfill. So this is where you get to see, okay, fine, I have ISA 200, I have ISA 210 and so forth being addressed. I just want to see in detail what they might be. You can always collapse that, and then you read more as we have detailed out the information in summary, obviously, on what the ISAs are being addressed and also what they say. So your guidance, it's your handbook, it's your Bible, and your BFF as always. So now I'll just quickly then go over to 11:15, where I'm going to explain to you what the roll forward cell means. So I think most of us who have used RAC, right, even if you've used it for the first time, we've probably rolled over into the next year. So usually I don't want to repeat some information into the next year. You know, if something needs to pull from my prior year, if I have items that should, that need to be addressed in the next year, then we do for that information, and we call them the roll forward cells. So this is the blue or the dark blue, where when you see it for the first time, you might think, okay, this is a formula, and NB, don't delete any formulas. However, for the roll forward, when it's your first time auditing, you do have the right to type in something in there, and then this information will now be the one that gets rolled over into your next financial year end, right? So when you have rolled over, every time you roll over, you'll always see a RAC template warning message. And it would say that do not carry over any RAC working papers template, because they will be updated and roll forward information will be pre-populated for you. So remember, the whole idea with RAC is to make sure that this system is highly automated to save you time. You can perform more audits, and also the team will be well aware on which working papers might not have been filled properly for the next one to pull, or for the audit to populate for that manner. So lastly, before I hand over again to Journey, I'm just going to go over into this working paper, which is our RAC workflow. So I'm not going to explain a lot, but if when you have your RAC working papers, this PDF is always there. And then you can always use that as a guide to understand how the audit is flowing, how the working papers actually flow in the system, and which one gets affected from planning, execution up until you reach your final sign off, right? So I'm just going to quickly show you that this is how the RAC workflow working paper looks like. So it just tells you your pre-engagement activities, your planning, your execution, and also your reporting. So we did explain the legend of the colors, whether the light green, it's a new engagement, your maturity considerations, items that are significant risk assessment, and how they flow to the next working paper. So if there's anything happening, let's say on 1605, just always try to pinpoint where does it flow from, or which working paper actually pull into here before I got into my risk assessment. Okay, so that's it from me, and I'm just going to hand over to Journey again, and I will see you guys in the next bit. Over to you, Journey.
Thank you, Matsebo. As I said, we are not going to go through all of the working papers. You will note that section 10 has a lot to do with your client acceptance and kind of procedures before you actually move over to your risk and identification section. Right, so what we are going to discuss is working paper 1010, planning materiality. Now, materiality, it does sound very serious, but in reality, it's just us agreeing on what is worth losing sleep over. All right, so that is basically what materiality is. Okay, just scrolling to the top, what you will see is we do as much as possible try to bring in the values accurately from the TB. Now, there are instances where perhaps there's something wrong with the linking, or maybe we did something wrong and your figures are not in line with what you expect. So we always warn you and sort of tell you, you know what, please make double sure that you look at the amounts that you have and try to align them and see if they make sense to you in relation to the financial statements you received from the client. All right. We do also have this AFS detail sheet where you can go and refer to. So it looks a lot like your financial statements would. So you can also run through that as well. All right. But always make sure that the amount here does make sense. We did make them lighter blue cells, like Matsebo explained before. The lighter blue cells are there for input cells, and you are allowed to overwrite them. All right. Hopefully, we did everything well, and you don't have to. Now, just a few settings that's here on the top, right? We do give you the opportunity to make use of 3 bases for comparability purposes. All right. So you will see, for instance, let's say you have an interim audit. You can go and say, you know what, this is an interim audit. What you will then see is, if you do have a TB imported into the interim column on your working trial balance, you will then see that the amounts will pull in here, right? I don't have anything in, that's why it's 0. But I also just want to show you that here is that red cell that Matsebo was talking about earlier as well. The reason that it is giving me a red cell is because one of the bases that I said that I may want to use is not also in my list, right? So if I look at the list, you will see it only gives me the options for what I have here at the top. So I need to either go and change what I have here at the top, which I'm going to do, and then you will see it will now go back to the to what it's supposed to be. All right, then you are also able to extrapolate based on your interim audit. So let's say you have a 10-month period that you are doing an interim audit now on. You probably want to extrapolate to materiality as well. I want you to just have a look at the figures that I have over here. So it's also only on the profit and loss accounts. So look at the amounts. Then what you will see is if I go and change this to a certain period, let's say 10, then you will see we extrapolate the amounts for you. All right, so that is also an option. I'm just going to put it back to 12. All right. The next option is, what we are asking you is, obviously we selected now our estimate that's going to be opening. And now we are asking you that please indicate the broad nature of the entity. So we are asking you to please make use of the drop down. So it's important that you actually choose this correctly, because we do need to know from which table we need to guide you on. All right, so if you select any of the others, you will see at the bottom there are different tables that we use. So I'm just going to select profit oriented All right. I just want to clear that quickly. Now, we do open up the question. So we're asking you, you have now said you're going to use the opening values. You said that is a profit-oriented. Why? So hopefully you will document. So always document the methods to your madness. Remember, if something is not documented, it is not done. All right. So always document. Then we have some space under action 1, hopefully for the users of the financial statements, where you can indicate. Then we get to action 3. Now, action 3 is where you can decide which basis you are going to use, and with the with a set of ranges for their basis. Now, we do realize that these are actually quite old, and it is based on very old guidance we got from IRBA. So we do also understand that there may be a softening stance on this, and your firm may have a different view on this. If you want to change them, please contact support, and then they will show you how to change it, or they will just change it for you on the file. So you are absolutely allowed to change it. All right. Then we only provide you with possible materiality amounts. Okay, so we don't want to take away professional judgment for you. What you will see is when you open the working paper, that will always be a R1 value. Okay. You need to go and set up your materiality. You can use the possible ones, but we do not allow you to exceed one of the possible ones. So if you, for instance, now want to go say, you know what, I want to do 3 million, it's just not going to happen for you because it's exceeding the ones that we already suggested for you. So I'm just going to put that to 2.4 million, and there you go. For the performance materiality, you are absolutely allowed to change this. We do default that to 75. Again, each firm has their own policy, and you can just type over it, overwrite it. Then we also have an option for specific materiality, right? So if you, for instance, know you want for property, plant, and equipment, you want to set a different materiality, you can come over here and look at the possibles as long as it doesn't exceed, and say, you know what, I'm going to use that million for my possible materiality. We then do also calculate the specific based on the percentage that you have selected here at the top. Right, under action 5, again, if you need to change the range, I know some firms actually used up to 5%. You can also ask support to assist you on this one. All right, so and that is that for materiality. So as you see, it's nothing scary. Actually, a very easy working paper to complete. The next one, which will follow onto this one, so you cannot go on to the next one if you did not do your materiality. So that working paper is also under section 10, which is 1020, identification of audit sections. Right. Now, identifying your audit sections, well, it's basically like organizing your closet. Everything technically fits somewhere, but some items do need a little bit more of a thought. Let me just scroll up. All right. So here you will see we list all of the sections you will have in your audit. So that is based on the TP amounts that you imported. Now, we made the decision to list this as such because there may be instances where you want to audit something differently. So, for instance, you will see payroll has its own section, right? The reason we decided that is, like I said, is you may want to have completely different audit procedures rather than, let's say, if it was included in cost of sales, probably you would have just separated those amounts anyway. So we added it to its own little section. All right. You will also see, for instance, we try to keep things, all of the cycles together as much as possible. So you will see here is depreciation. We put that to section 30. If we go down to property, plant, and equipment, you will see that is also section 30. Right, so we do try to keep all of these cycles quite together. Okay, then what you will see based on the materiality, that's now under action 4, based on the materiality, we do go and indicate whether a balance is quantitatively material. Where a balance is not quantitatively material, we indicate that as an automatic no, right? But we do ask you, it is not material right now, but is it perhaps qualitatively material? So we leave that decision up to you. So I'm just going to say no. All right. Then where it says applicable to the audit. Now, what we have done is where there is a balance, either prior or current year, we automatically include that into the audit. The reason for that is, and you cannot change that, unfortunately. Reason for that? Well, we realized that per ISO 315 is that each and every balance needs to go through the risk assessment process, right? You cannot scope it out right now. So previously, very long time ago, even when I still audited, if a balance is not material, we would just chuck it into a completeness working paper and we're like, there you go, we're not touching you, all right? We are not even interested. So now, unfortunately, each and every balance needs to go through the risk assessment process. So only later on our later documents in 1605, can you actually scope out where something is not material? Can you actually go and scope that out? All right. So for now, it needs to be part of the audit and it needs to also have a section. Okay. These sections is allocated automatically. It happens in the background, right? So don't stress about that. And then lastly, we also have action 5, which is materiality. So you can select whether you want to use planning or revised, hopefully planning. And then you can also select which materiality you want to use. So if you click on it, you will see there's an actual drop down, right? Earlier, we said we set total assets as a specific materiality. So let's say we now do want to set a specific materiality to property, plant, and equipment. You can then also go and say, you know what, let's use total assets, and then it will bring in that materiality figure for you. Going to the bottom, you will see we also have some specific risk areas, which is related parties, contingent liabilities. We also now have cash flow. We are yet to add in a proper working paper, but we are definitely working on one. We automatically set these two at the top as qualitatively material. Hopefully you won't change it. You are allowed to change it. And hopefully you have a really, really good reason as to why it is not qualitatively, but we will use that up to you. We do automatically include that in the audit, in your audit, and we do generate that section as well. You can also add your own. You will see the moment you click yes, it will actually add its own section as well. Then lastly, at the bottom, journals, that is automatically included. You do not have a choice in it. You are able to set whether you think it's qualitatively or not, but even if you do, you still have to go through journals. You still have to test journals. That is just based on ISO 240. And that just has to do with management's ability to overwrite, especially passing journals, just passing journals for the love of it, right? Right. Hopefully it's not for the love of it, but hopefully they are not overwriting those journals or are, overwriting those controls and journals. Okay, then that is that. So you absolutely need to identify your audit sections. You need to do your materiality first, identify your audit sections. Otherwise, all of the components that you see in here is not going to populate to the rest of the working papers. So it's super important that you do complete the working paper. Just one last warning. Often we see sections that's not being populated, and then afterwards you're like, oh shucks, I didn't add a section. Especially if we get to, for instance, tax. Let's go to tax, the taxation. So taxation, you will see it's 0, so there's no balance. Sometimes the client's even making an assessed loss, but we still need to do some kind of work on it. In such a case, you would rather want to just make a tick mark, so it's automatically no then because there's no balance. But you can just go and make a tick mark and say, you know what, I have to do some work on it, and I just want to also allocate that section. All right. Then that is actually the most important documents for section 10. I'm going to give over back to Matsebo, who's going to take us through 1025 and just also explain how our control documents would work.
Thank you, Johnny. Okay, so now as we are flowing, remember the RAC workflow, we start from your beginning, your planning, engagement setup, and now we are going through to one of our control sheets. So the control sheets are very handy and very useful for you as the audit partner. You just want to check whether everything has been done, working papers have been signed off, and you can confirm where you need to confirm. And 1025, it's literally just one of our control sheet, similar to 17.95, which is the risk sign-off. Remember 17.95, that's where you check if everything has been set properly, everything has been completed properly before you can populate your audit programs. And also we have 18.00, and we also have 06.05, which is our audit control sheet. So I'm just going to focus on 1025 for now. And remember 1025, it confirms the results from your first session, which is section 10, which is your engagement and team setup. And in order for you to sign this section and continue with the audit, right? So we do have, as we did explain the colors earlier, so we are now familiar with what the colors mean and also forth. So on this working paper, most working paper, when it comes to our control sheets, audit working papers, we do have hyperlinks to exactly the working paper that you might need to check on. So if they say there's a document name, a relevant question, and if the result, you're not happy with the result, it's easier for you to just click on that hyperlink, go into that working paper, fix what needs to be fixed so that the result of that working paper can pull in here for you properly. So as you are checking this working paper, you do need to confirm, right? So in most cases, we've heard issues where you find that I've done everything, just for the demonstration purposes, all the result from my documents are perfect and I'm happy. And well, I have confirmed some of the items in here, but if I go to 17.95, it's still pulling a no on whether this document 10.25 has been correctly signed off. So just always check that. Also, you might assist even your audit partner that they check that under confirmation column is all the cells, they need to be set to yes. So all of this does need to be confirmed, unfortunately. And then that will be the only way where the result of this specific document will then pull through to 17.95 as properly completed. So now I just want to talk a bit on this last part on the specific working paper. It says, would you like to log the calculation of planning maturity in 1010 planning maturity? So if this is yes, and your TB gets changed, and for whatever reason you are not revising maturity, it's just that the figures have changed, the client has given you probably version 10 or version 18 of the TB, because that's how it usually is in audit, where the first version that you get probably not even the most final one. So now you need to update the TB. You need to import your TB again, probably have to link here and there. So what you need to make sure, if you want your figures to pull through to your planning so that it updates your planning basis, so all the maturity bases that you will be using, for them to update and thus affecting your performance maturity, this needs to be a no, or you can just leave it with no answer. Then it will also update 1010 for you to get the most updated performance maturity. But if this is locked, everything that you would do will not change on 1010. Your maturity will remain the same. And if you have to revise your maturity, we do cater for that as well, where you have working paper 18.05, which is where you would do your maturity revision in there. So please just always look out for this part, because there would be instances where even on remote support, where sometimes you might find that TBD changed, but we forgot to set this as no. And now we see that our performance doesn't change and it keeps being the same, now you think, okay, maybe there might be an issue, maybe the system is not working, but this is your most important part to check and make sure that it has been set to no if there is a need, or then you can just set it as yes, then you would log the materiality to make sure that there won't be any changes that you aren't aware of as the audit partner. All right, so once all of this is done, then partner would then come in and sign in. Remember, we do make sure that this is as seamless and easy for you as you are continuing with the audit. So everything in here is quite electronical. So the moment the partner signs, it pulls through and then it will update on the other working papers that also pull from 10.25. So this is merely just your 10.25, and I am done with that now. I'm just going to allow Jenny to continue with the next section of the audit. Thank you.
Thank you, Matseba. I think I accidentally didn't untick that materiality like 10 times this week already. So thank you for reminding us again. All right. Okay. So that would be that for section 10. Like Matseba said, that would be your control document. And it's always a good idea for the partner to just check what still needs to be done in that specific section. Right. Now, the next section is 11 and 12. Now, this is where you are going to grab a nice cup of coffee and you are going to bother your client, basically, and you're going to have a chat and just see what is going on in the business, what happened in the past year, and you're just going to have a nice little chat, and hopefully they are comfortable enough to open up and dish out all of the nice little gossips that happened. All right. The next document that I feel is also very important is going to be 1210, understanding the nature of the entity. Right. Now, this step is all about understanding your client. So remember, auditing without context is just us guessing, and we are professionals, right? We are not psychics. We need to go and have a sit with the client, and we need to see what is going on with them. Who is who works where, what is going for what, all right? We need to sit with them. Okay, so what you will see from the actual working paper, if you go to 1210, this one is exhausting, all right? This goes on till the end of days, all right? The good news is these are blue, most of it is, there's blue, darker blue cells, all right? So if you do complete it properly in the first year, you can always just roll it for the next year and everything will pull through just as it is from the prior year, right? In the next year, you just read through everything, see if everything is still the same. And if you do need to go make changes, you'll literally go right click and paste value. Sorry about that. All right. And you literally just paste value. Okay. On the scoping sheet, right, you will now see that we did realize that you may be dealing with a smaller client, all right? And it may be worthwhile to go through some of these areas and then just scope out the areas not applicable. For instance, your client may not be dealing with service organizations, right? And you may want to just click that as no, all right? If you click no, it's going to delete the section on the actual working paper. So please be aware of that. Also at the top, right, there is a question that's asking you, do you only want to document your understanding of the nature of the entity in a simplified paragraph form? So if you say yes, you will see everything hides. And then if you go to the other working paper, you will actually see that there is no limited space for you to document. So if you are absolutely sure that you will not miss anything, you can just come and document, right? It's not recommended. But what we did is at the top of the working paper, we did go and say, I'm just going to put that back. We did go and put in a evaluation or a declaration rather for the partner or the manager to just declare, you know what, I see what has been scoped out. I can see what has happened. I am happy with it. So we do put a declaration. We add it at the top just in case everything is hidden here at the bottom. All right. Going back to the actual working paper, We talked about the blue cells. Okay. After each section, what you will see is there is a section for risks. So each section you're going to find the table. We then list a potential inherent risk factors for you. All right. Now, you can go and say, I'm just going to raise my own risks. You can go and say, you know what, this is a risk 1, maybe risk 2. Hopefully, you just give a proper description. And you can go and say, you know what, this is a risk. I'm going to say, yes, it's a risk. And you need to now go and allocate the risk. So a B is for the business risk. That is actually inherent risk. We do understand that the naming convention is a bit confusing at times, but we did keep it like that because all the RAC methodology has used the B, and we didn't really want to confuse our users, right? So hopefully we do plan to change that soon, but if you are ever confused, that is actually an inherent risk. If very obvious, that is for fraud. All right. I'm going to say yes over here. Maybe also let's do that fraud. Now, it's very important to realize that it says here, is this a risk of material misstatement? All right. Now, it's not a competition to go and click yes everywhere and see who finds how many risks, and it's not a competition at all. You need to go and familiarize yourself with the definition of what is a risk of material misstatement. All right. Only actual risks needs to be raised. All right. If you do go and raise a lot of risks, you're going to see when we get to 1505, which is our risk register, you're going to have a lot of work to do when you come to your audit plan as well, when you have all of these risks. All right. So make sure that you sit with your partner or your manager and make sure that the risk that you're raising is an actual risk of material misstatement. Okay. Then just for this document, if ever you run out of space, you will see we do provide space, but in certain cases you may want to go over. So this document, I've been told, is sensitive like a woman, right? We cannot disturb or stir her, so we would rather just ask you to add in a brand new working paper and then just hyperlink to it. All right. All right, so that is basically that for this working paper. And like I mentioned, there is a space for risk everywhere, and all of these risks is going to pull through to 1505. Okay, the next document that's also going to be important is 1240, which is our entity level controls. Everybody is scared of controls. All right, so but let's go through it. Okay. Now, entity level controls, it's basically management saying we have policies, and the auditor is saying, cool, let's go and have a look. Right. So if an entity level control is strong, we tend to relax a little bit on that client. Right. So these controls exist so that we don't have to solely rely just on hopes and vibes. All right. So that's why we check the controls, especially the environment. Okay. So you will see there is a significant amount of space on this document. All right. So please don't get overwhelmed. Good news is you don't have to complete everything, but you will at least need to go and read through everything to see what you can answer, what is applicable to your client. So the important thing that you need to realize about this document, it has nothing to do with controls over, for instance, revenue or any assertions. So if you, for instance, look at the very first question, it's asking, describe how management communicates the need for integrity and ethical values. So you can see it doesn't relate to any type of balance. It's just asking you, what does management do to actually to communicate these values and these ethical, the integrity and ethical values? So it's asking you, it's based on the internal policies. What is the environment like? Right. Is it good? Do they actually communicate it? Do they just don't care about it? You know, that is what you need to find out from entity level controls. Okay. So what you can also do is let's say you want to complete the first one, but you'd rather want to leave the sub ones. You are welcome to go and say, you know what, this is not applicable to my client. And maybe you're going to do the one at the top. Right. But before we go on, I just want to show you something that's here at the bottom. So under action 4, there is a conclusion, right? It's your goal that you need to reach. Now, in this goal, you will see we added in wording that specifically says, consider the nature and complexity of your entity. Now, this is very important because now we look at this document and we're like, oh, our client does not have controls. It's a little one owner managed client. They don't have these controls. But if you actually go and consider the complexity and the nature of the entity, you're going to realize the owner managed company, the owner, he is involved in everything. He knows exactly who owes him what. He goes and buys the stock. He's so involved. There are controls. It's just based on the complexity and the nature of the entity that may not just be well documented, or it's not like this big corporate company, but there are controls. So you cannot just leave things out. Every company has controls. You just need to consider whether the complexity and the nature is what it is. So this is where your professional judgment plays a big, big role. So you need to go and determine when you sat with your client up to from 11 to 12:35, when you sat with your client, what is the juicy things that you found out from your client, right? And then you can start realizing, you know what, this is appropriate, this is not appropriate. All right. Okay, just quickly on how we are going to complete this document. So we will say, yes, we are going to, there's an entity level control. We're going to document our understanding. All right. Then we are going to determine, is there a walkthrough test required in terms of ISA 315? Please go to your Bible and see if it's required. Then you will actually go and chat with your client, pretend you're just having a nice cup of coffee, but you're actually doing a nice little walkthrough. And then you will come and document. And then you will go and determine, yes, the control is adequate and if it's appropriate. So if it's not, we do tell you, remember, you need to communicate with management. You need to have proof of where you communicated with management that the control is not adequate or it's not designed or it's not in place, basically. All right. So then you can just hyperlink to the rep letter. It's finalization. Right. Then you can go to the report templates. Okay. And then please don't confuse this with the actual risk of material misstatement. This is where you document your control risk. But let's just say, yes, everything is hunky-dory. Going to delete that. And then at the end, we need to assess whether the control is effective or not. Okay, let's say, yes, it's effective, but please make use of your professional judgment when you do answer this question. Right. Then the next document, well, we are going to 1245, which fits right into this working paper, 1245. Okay, now that's IT controls. Well, skipping IT controls, it's just like skipping instructions. You may survive, but it may not be very pretty. All right. Very important to actually go through IT controls, especially in this day and age, right? Businesses can close down if people do not have IT controls, right? This document works largely the same as 1240, so you'll see it looks the exact same, all right? But I would say go through it and see if there's not something that you just may want to check out, even if the control does not exist based on what you discuss with the client. Just see if there's something. Remember, these are IT controls, right? At minimum, I would say at least if you go do a backup and recovery, all right? Because every business needs to at least have a backup and recovery system. I mean, if you only have one little laptop, there's no backup and recovery type of procedure, or you don't know what's going to happen. You can stop at the shop tonight and your car can get stolen, or there can be a fire, or you can have a cup of coffee and you can fall over on your laptop. You don't know. You need a backup and recovery system. Because if you don't have a backup, how are you going to determine who owes you what, who you owe? I mean, your debtor can come and say, you know what, you don't have proof, I'm not going to pay you, right? And you can actually close down. So it's always very, very good. It's a value add if we can tell our clients, you know what, we see there's not a backup and recovery system. Remember, your client doesn't have to listen to you, but you can go and say, you know what, I did communicate with you. I did go and say, you know what, yes, I did perform it. It was not adequate. Nothing happened. This is where I communicated this to you. All right. So let's hopefully everybody has a backup and recovery system. Yeah, but go through it and see what can be applicable. And then again, your end goal is to conclude whether it's effective or not. So it doesn't matter if you do plan to test controls or not. It's just that if at a later stage perhaps you want to or you need to test controls, then at least you can say, you know what, I checked my entity level controls. The general overall feel is effective, and IT controls generally it's also effective. So it doesn't matter where you are going to do it. It's at least you did determine it's effective. Again, considering the nature of your entity, you need to consider whether they are effective or not. Just quickly, something I didn't mention before is at the end of the working paper, and you're also going to see this on other working papers, we do have sections where you can raise inherent risks as well. So if you think you did find an inherent risk based on the work that you've done, you can also just list it over here, which will then pull through to your risk register. Right. 1245. Well, that is where your application systems are. So sometimes we also like to test applications, but we need to also firstly determine whether it's complex or not. Now, this is a very easy document. We do have plans to extend this document to have more applications. Right now, it's limited to 5. Okay, so very easy. We do list pastel. If you do not want to use pastel, you can overwrite that. Remember, blue cells. Okay. Only thing you need to do is select whether your client is using pastel. So if you say yes, then you'll see all of the answers opens up. And then we answered these questions based on what we know about pastel, what we think the appropriate answers are. So if you don't agree with us, we are happy with that as well. You can go and change it. But these questions are to determine whether you are using a complex system or not. Okay. You're welcome to add in your own. You can just type there and just indicate as well. All right. I'm going to go a bit down. All right. Then, very important question, we do ask you, do you intend to test controls? Yes or no? Remember, doesn't matter if you are going to test controls. It's just in case. So we say yes. And then, of course, you need to just select which components you are using. So sometimes your client uses an entire different system, for instance, the fixed asset register. Then you can come and list it over here. All right. Then you can select, for instance, only depreciation and property, plant and equipment. But probably when you're using pastel, it's probably going to be all of it. Okay. All right. Then that is that for 1245. Okay. Next up, that is our section 13. This is our system descriptions, all right? Basically, as our design and implementation. Now, firstly, you will see there's a lot of things that we list over here. If something is not applicable to your client, please go and just mark it as not applicable. We are planning to improve it. We just really didn't get to it yet, but we do plan to only generate the ones that is actually applicable to your client, all right? So it doesn't mean now you have to go through all of them. Just the ones that is applicable to your client, right? Okay, I'm going to open one. Okay. I just want to scroll also just quickly down to the bottom. Right. I just want you to see what is the conclusion you need to reach. So this is the component. It will list the component here at the bottom. Open up. Then you will see the conclusions from the previous 2 working papers actually pulls through. Right. So this is in case we want to test controls, or if we plan it later to test controls, just in case. So it's asking us to just again conclude whether what we found on 1240 and 1245, is it actually effective? Now, currently it says, please complete question above. If we complete it, now you're going to see it says no controls identified. Okay, that's because we still need to go do the control testing. So if we go a bit up, if we start again at the top of the working paper, you will now see again these nice little blue cells. So you can go and just complete some general information about the client. Action 2, list the applications again for us. So it's just a nice little summary. And then we get to action 3. Now, the intention for you is to document your system descriptions in the table that we've provided here at the bottom. All right. You can go and say, you know what, yes, I would rather just want to import my own system descriptions, because there may be a circumstance where you have very nice documented system descriptions and you rather just want to import them. So that is fine. But if you do decide that, we do put a warning over here, right? The intention really is for you to add everything in the table, right? So you will see the importance of us actually doing the system description on this table when we get to the risk register, because when you have a significant risk, the ISAs tells us that we have to document the control and we have to do a walkthrough. So let's say, for instance, you now do nothing on this working paper because you are absolutely 100% sure that you are not going to test controls. Then you get to your risk register, and someone in the audit team actually went and they raised a significant risk on the completeness, for instance, on property, plant and equipment. And now you have come back to this working paper and then you see, oh, but I didn't do any work on it, right? Remember, you have to. If the ISA 315 says you have to. So at least then for completeness, you will have to come and do the system description. Well, you have to do the system description anyway, but then you will have to come and document the control and then also do the walkthrough. All right, so that is why we say we do like for you to actually come and document your system description so that it can roll forward each year as well. Okay, so other than that, you can just go and say you document your understanding of the control. Then you will go and say that allocate the component. You will say whether, let's just say safeguarding. You will say what decision, whether it's manual or IT. Now, if you only get the option to say manual, that means you did not complete 1245. All right, so I know this comes up on support sometimes. If there's only a manual control, you did not complete 1245. Similarly, if you do select IT control and you now want to select your application, if there's nothing over here, again, you did not complete 1245. So I'm just going to say manual, and now you'll see it actually closes. Then the frequency, let's say daily, maybe they're looking up as it's daily. Say whether it's direct or indirect. And then just the name, let's just put my name. And then here you're going to document your walkthrough. All right. Again, exactly as before, say whether it is effective or not. Now, if you go a bit down where we ended up before, you see what's happening now. It's saying completeness. We found 1 effective control and 0 ineffective controls. And the rest we said is no controls is identified. All right. We then just need to confirm again. So we say yes. And then when we get to 1605 and also 1505, our risk register, then you will also see where this is going to fit in. All right. So again, it doesn't mean you're definitely going to test controls. It is just that if you have to, or at the later stage you do decide to, or when you get to your audit plan, then at least you know what, I have one effective control. I hope everybody is relaxed after that. And let's jump right in and move over to our risk register. Right, now the risk register, so this is where management hopes for the best and auditors plan for the worst. All right. Okay, so the thing that we changed on this working paper is previously you would have seen that there were a big blue space where you could have actually added in additional risks. Now, what we have done is we have removed that completely. You would have seen it here in the place of this notification. We now actually added that option to our standback working paper. So the intention is that you now complete your planning. So you raise all your risks and then you go through your risk response. And then after that, you will stand back and any additional risks above and beyond from planning, you will then do in that working paper. All right, that's why we removed it over here. Okay, but we will do that at the end. Okay, so that is the big change on this working paper. Nothing really changed other than that. It still works the exact same, right? So you will see the revenue recognition actually pulls through over here. If I do open the revenue recognition, that is that is definitely going to disappear because ultimately you actually need to do the revenue recognition in that specific working paper, right? So just to show you, if I open it, you can complete the working paper, right? And then come back, and then you will see it now actually disappeared because the risk is actually in that working paper, right? We don't deal with it here. Okay, I'm not going to go through 1217 now. If there's enough time, I will quickly run through it because the principle actually stays the same. So if I go to 1505 later, then you will see whatever you have on 1270 is basically a repeat, except for you can actually rebut your assertions and your revenue on that week on 1270. Okay, so that is the difference. Now, again, you need to assess your risks, right? So here you will have to go through, you need to identify whether it's a duplicate or not. So what happens with this document is you need to grab the team and you need to sit and discuss the risks that you raised, right? Because there may be duplicates, there may be someone that worked on a different working paper and now you raise the same risks. So it's always good to gather and always make sure that you discuss these risks. And also, obviously, the partner needs to be present. Right. Then let's just say, no, it's not duplicate. Okay. Is it compulsory in terms of ISO 240? So if it is, you'll say yes. If you say no, if you do say yes, you will see if we initially said that this is a business risk, it will now change to fraud risk. So let's just try that. There you go. Then you will see because ISO 240 deals with fraud. Just going to say no. Okay. My second risk, basically, I'm just going to keep that as a fraud risk and perhaps not. No, well, obviously that needs to be yes. Okay. At the bottom, you will now see all of our deleted and prior risks will be here. So if we raise the risk in a prior year, when we roll forward, it will come over here. All right. So it still needs to go through, except if you delete your risk. Okay. If you want to delete the risk, the manager partner needs to log in and then they can replace this N with a Y, right? If you delete it, they are gone forever. So just know that, right? If you do not delete them, you will have to go through the risk assessment to the rest of the working paper because you will see we have especially a tab to deal with the risks that we've deleted or pulled through from the prior year. All right. You can delete them, but rather let the manager or partner delete them. All right. Then again, on 1505, this is where we are going to assess our risks, right? You will see the description will pull through. So from the working paper that we've raised that risk, it will pull through. It's indicating whether this is a fraud risk or not. And then very importantly, it's asking us, is this a financial statement level item? Okay, so in this case, we say no, it is not, it's an assertion level. So we say no. Okay. Then we give you the opportunity to list your components. Now, we didn't give you a lot of space here. So the reason for that is because when you have a lot of components associated with one risk, you may want to think a bit further and maybe ask yourself whether this is not rather financial statement level risk, right? So that's why we don't give you a lot of space. So I'm going to just say, let's say property, plant, and equipment. Let's choose cash and cash equivalents, right? Then we have the likelihood and magnitude. If you do not understand the likelihood and magnitude, go to your Bible and then read what we guide you on, right? But still, this is based on professional judgment. Have a read through it and see how we recommend, and then make your own assumption or your own decision. Right. We do give you a level 1 to 4, where 1 is low and 4 is significant. Okay, so I'm just going to say maybe likelihood is 3, magnitude is also 3. All right. Then you need to go and allocate your assertions. So let's say existence, cash maybe, let's also use 3. And then maybe accuracy. Okay, doesn't make sense, but this is just for example purposes. All right. When you are then done, you have now raised your risk at the level 3. It gives you the component or the financial statement line item, and it will tell you, all right, this is your level that's going to pull through to your audit plan, basically. Then under action 4, you just document what management's response is, right? Next one. Here, the situation is a bit different. We have a fraud risk. We say yes, okay? We also want to assess that at an assertion level. So no. Now, let's choose property, plant, equipment again, and maybe trade and other payables. What you will see now is it doesn't give us the option from 1 to 4. It only gives us the option for level 4. Now, if you only have a level 4, that means it's a significant risk. So remember, ISA 315 deals with significant risks and fraud risks the exact same. So that's why that is a level 4. So even if we say this is not a fraud risk, we can come and assess it at a level 4 as well, and then we will need to treat it the same way. Okay, let's just say level 4. Okay, and then also allocate our assertion. Okay, now I would like for you to see what happens the moment you allocate your level 4. That's significant. You see what opens over here? It's controls relating to significant risks. So remember earlier I said that ISA 315 tells us that we have to do document a control and perform a walkthrough on it. Okay. So now what you can do is you can go back to the working paper where you documented that control and you performed that walkthrough and just copy and paste it over here. All right. So we can go to section 30 and you can basically just go and copy that. You can just copy that. Oops. Right. And then you can say whether it was implemented adequately. All right. So again, it doesn't matter whether you are going to test it. We just need proof that we at least documented the control and performed the walkthrough. Now, for occurrence existence, remember that relates actually to trade and other payables. Now, if we go to trade and other payables, section 51. Okay, if we now go to that system description, we didn't complete anything, all right? Probably what happened, you just added your own system description and you just didn't do anything else. Now, this is where section 8 comes in. So it's asking us, were there significant risks which were not addressed by control? So in this case, yes, right? Yes, definitely. So now we will need to give a description of the significant risk and then hyperlink to where we communicated this lack of control to management. All right. So because remember, because it's significant, we should have actually done the work. All right. Alternatively, you don't have to complete this question and you can actually now document the control and do the actual walkthrough so that you can actually document so that you don't have to report back to management. All right. So this is how you're going to deal with that. So hopefully you can see now why it's important to actually use the space that we gave you so that you can at least document your system descriptions. And if you do need it at the later stage, then you can at least come and document your control and do your walkthrough. All right. Okay. All right. So now that is at the level 4. Okay. Then it's asking us, does the auditor intend to test operating effectiveness of controls? If we say yes, what you will see at the bottom, we actually ask you to add your procedure. So when you have a significant risk, the ISAs tells us that we need to deal with that a bit different. So what we have done is we take your significant risk procedures, we ask you to design them here, and then we pull them directly to your audit program. All right, so you don't. It doesn't have to go through the audit program. It doesn't have to go through to the audit plan because we deal with them here. Right, we design them here. So I now said, yes, I want to do test of control. So you'll say that's my procedure for substantive, and that is my procedure for my test of control. Now, good news is we do have a level 4 for substantive. And you can now go and say, you know what, I have a very good control. So I am going to set that at level 3. Now you will see that actually gets reduced to a level 1. So when you get to that procedure and you did have a successful test of control, you can actually reduce your substantive testing to a level 1. Right. You cannot make this a 0, a 4, and that is 0, because remember, test of control alone is not sufficient audit evidence. Okay, then obviously you will see it gives us in red here the assertions we have not yet allocated the procedure to. Okay, and we can say yes, and then we are all happy. All right, so this is what you will need to do for each and every risk that you identified. So hopefully you can see now, if you now went just crazy and raised risks just for the love of it, you are going to have a lot of work and a lot of testing. Okay, then our prior and deleted risks, it's going to be working the exact same. I just want to show you what will happen if we do say that this is a financial statement level risk. So please ignore my detail. If you do say yes, you will have to give an overall response. There is a drop down. This drop down is dictated to us by the ISAs. We didn't choose the wording that we have over here. This is exactly the wording that we got from the ISA. So you can now choose whatever is applicable. Right. If you do say, can this financial statement level risk result in a component and assertions being material misstated, then you can say yes. And then there you go. It's the same procedure again. All right. So it's very easy to complete this document. The risk summary. All right. This is very important. On the risk summary, it's a summary of all of your remaining risks, excluding significant risks. Because remember, I said before that all of the significant risks will be dealt differently. So it's different procedures. It needs to go to a different process. That's why we designed them over here. So we designed them over here. So the level 4 will never show here because we just pull it directly to the audit program. All of the risks that will go to 1605, right, will then be here. Here we highlighted for you because sometimes it's a bit, we get lost in all of the zeros. We highlighted them for you, and then you will see these 3s will then actually pull through to the next document. Okay, then that is that for 1505, our risk register. Okay. Then 1605. Right, so this is where the good news is. All right. There are a few circumstances that you may have on this working paper. So basically what this working paper is, let's open, for instance, payroll. Okay. It's basically a summary of what happened in our risks, if there's any risks on it, what's the total assurance required, are we going to test control? So it's basically a summary of that. Now, what we have done at the top, you will see action 1. It deals with non-material financial statement line items. So remember when I said before in 1020, previously we just chucked all of our non-material sections into one working paper. Here is basically where you chuck it. All right. So I'm going to go to depreciation. Then you will see on 1505, we didn't raise any risk on it. The total assurance acquired is 0. So actually, there's no further work to be done. But you may be one of those cautious auditors and you're a bit skeptical. And you may want to say, you know what, I would rather want to at least test presentation and completeness. You can then as well go to the top and say, you know what, yes, I want to actually, for all of the components that is not material, I'd at least at minimum do that. Right. So then you will see now it says over here, okay, I'm going to test assurance at 1 and then presentation at 1. All right. So then unfortunately, it's going to carry through to your audit plan and that's how it's going to be tested. Right. The other scenario is where you did raise a risk. So let's go to property, plant and equipment. Okay, so here we see now, yes, we did raise a risk. It's pulling from 1505. The total assurance acquired is actually 113,111, right? And then we recommend whether you should test controls or not. So this just say no, but you can also make the decision at the end. If you look here at completeness, we actually say, you know what, it's a level 1, and you can go and say, yes, I'm testing controls. What you will see is the final level of assurance actually goes up to 2, because if it's a level 1, it cannot be 1 for test of controls. We do up that because, again, test of controls alone is not sufficient. Right, that's why we up that. Right. The other scenario, so this is the good news, all right? Where we have a material financial statement item, there it's indicating for us. So previously we took the conservative approach and we basically forced you to test all of the assertions at a level 1 for material items, even if there were no risk. Okay. So what we have done now, we still need to test something, all right? Because, just to take you to the guidance, under ISO 330, paragraph 18, it does state that irrespective of the assessed risks of material misstatement, the auditor shall design and perform substantive procedures for each material financial statement line item. So here it just explains what we did. So what we did is, we now automatically set a presentation for you. So at minimum, we know you are basically signing off on the financial statement. So at least that needs to be correct, right? Then we go and say, you know what, choose at least one other. You don't have to test all of them anymore. Please just one other then, right? So that is now our new conservative approach. You cannot go and say 0 for all of them. Okay. What will happen is you will get all of these red screaming cells, and then we will force all of the final assertions to a level 1 anyway. Okay. So then at least choose one, and then there you go. At least you don't have to test all of it anymore. All right. So that is okay. So that is basically our big change. We received a lot of feedback on this one. So hopefully we have some happy guys over here. Okay, then if we go to 160502, again, that is just a summary, right? But now you will see, we clearly now set some of the things to level 1 zeros, but here we see 3, 3, 3, 3, 3. Oh, I'm not going to test all of this at the level 3. Imagine my sample sizes. All right. What you need to do is scroll to the bottom, obviously complete the document correctly, and then the partner would need to make his or her declaration and then sign off the working paper. Right, let's sign it off. And then there you go, you will see the correct risk levels actually now pulls through. All right, because we do want your partner to at least go through the document and see if the risks that pull through over here is appropriate, or they're happy with the testing, so that we can start doing our planning on 1705. Okay. Okay, then quickly on 1705. Okay, 1705, well, that is just basically our nature, our timing and extent of the audit. Who's going to do what? What's going to happen? What type of procedures are we going to perform? So we need to decide over here. So let's see what we're going to do. All right, so property, plant and equipment. So here we do recommend, we do say that we're going to test because remember, on 1605, we said we intend to test controls at least for completeness, right? So now we automatically allocate that level 1. You can change it if you want to. And then for substantive testing, right, the substantive column, we say, okay, test low level 1 at a lower level, level 1. You can go and say, you know what, I don't want to do substantive testing. I would rather do substantive analytics. You can go and say level 1, and then you will see that is also none. You can also go and say, you know what, let me do that also at a level 2, but then you need to start consider what you're doing, because then you're starting to over-test. All right. Where there are no controls or levels that pulls through, for instance, let's say taxation, you will see it will always be none. Because remember, if you did not test or did not test the effectiveness of your controls and did perform the walkthroughs, you cannot actually test controls, right? Where you have, for instance, only assurance over here, assurance from substantive testing, which we select for you, you can go and say, I don't want to do that at all. I only want to do substantive analytics. That is a valid answer. All right, you can do only substantive analytics or only assurance. It's just test of controls. You cannot do that only. All right. All right, then go through the document, see if all of the levels are correct. Are you intending to test controls? So everything over here pulls through from 1605. So if something is not pulling correctly over here, then something is not correct on 1605. If something is not correct on 1605, then you will need to start looking at section 13 and 1505, because all of these control related things actually pulls through from section 13, and then also 1505 is our risks. Okay. Next, well, these are just basically who's going to do what on the audit, the timing, who's going to do what, all right? This sheet is, for the most part, it is actually locked, so hopefully the senior or the manager can at least select who's going to do what. On 1705, you will see this is where our significant risks are. So hopefully a more experienced person will test these sections. So that's why we separated. I know when I was still in audit, we would rather just want either the manager or the senior supervised testing revenue, for instance, or even journals. All right. Okay. When you are then done with 1705, we then have another control document, 17.95. Now, we do list all of the documents that actually needs to be done before we populate the audit programs. All right, we list it over here. So hopefully it is very, very good practice to make sure that everything over here is indicating yes for you. We also do understand that in some cases, there may be something small that somebody still needs to attach before they sign off and before the conclusion can be, or maybe they just don't want to sign it off yet. That's basically that. I don't want to go further, but there may be circumstances where the manager and partner already reviewed the file. They know that there's maybe something that's still tiny bit information that's still required, but they are in general really happy with the risk assessment. Okay. The partner or manager can actually go and say, listen, I am fine. I don't think there's any cause for seriousness. I did review everything. I'm happy with what happened. There's literally information that's tiny. It's not going to impact anything else that I'm going to do. And you can go and say, you know what? Yes, everything is fine. Because on our validation sheet, you will see we have 3 yeses. So the first thing that you have is you have to at least populate or allocate your components to a cycle. So 10-20 you need to do. Then 17.95, confirm everything. So hopefully everybody keeps within the ethical and have some integrity, right? So it's just good practice to make sure everything is yes, but things happen in audit, all right? And then the partner just needs to sign off as well, all right? If I sign off, then you will see also confirm at the bottom, all right? Then you will see, yes, everything is now hunky-dory. Right. Before I populate, I always just like to make sure that my smart docs in the background updates. I just usually go to another working paper and then someone populate from there. Right. How to populate my audit programs. I'll go to the top. I'll click on working papers. And then you will see on the left, you'll say populate working programs. Press the button and sit a bit back. Wait for 2 seconds or so, and then you will now see all of your audit programs will be generated. And then, of course, that lovely little stand back assessment that we added is now also there. All right. Okay. Matsebo is going to give me a little break, and she is going to explain to us how you would go about completing the audit program, as well as how it's going to fit into our planning sign-off. Because remember, you need to do everything up to 17.95. Then you need to populate your audit programs. And then you need to go design your procedures based on your audit plan. And then you need to come to 18.00 and sign off your planning. Once you have done that, you are ready to sample and you are ready to start your testing.
Thank you so much for that journey. So now we are almost done with our planning. Now, another control working paper, which is planning sign off. Remember, this is where you determine that all your planning procedures have been completed. Your section 10, 11, 12, 13, 15, 16, and 17, and that the audit programs, which are from section 20 until 60, have been appropriately designed to comply with the audit plan. Remember, audit plan, that's your 17.05. So after you have populated your program, which will be there, you went into your audit program and you have selected your procedures that you want to perform and so forth, and you're fine. So this is one of the control sheets that we have when it comes to planning sign off. Okay. And also, just to mention that on 18, this is where if you have revised your maturity working paper, which is working paper 18.05, you can set it as locked. And the confirmations in here, blue cells, which are your input cells, but we do have validations for that. So you can either choose a yes or no in this one. So quickly, I'm just going to talk about this. This is the part that I was talking about, whether if you're done, everything is done, you are happy, this will now be set to a yes, and also this will be set to a yes. So the moment you set this part, especially this part here, actually this whole part, once it's set to a yes, you are basically simplifying the view. I'm sure we are all familiar with how an audit program looks like. I'll go into it shortly, where you have all this many procedures. Some of them you'll perform, some of them you're not going to perform. So all the procedures that you won't be performing will now disappear. Doesn't mean that they got deleted, just that now they are hidden, because now I'm basically taking my audit program from planning mode to execution mode. So now it makes it easier as well for the audit partner to review and a better view. But if I want to revert to the planning mode on my audit programs, then I have to set this back to no. All right. So now if I scroll further down, you'll see that there is the compliance action 2. Compliance of audit programs in terms of the audit plan, which is 1705, which has been approved. The partner is happy. Now we have all these items here, the audit program, the result, and for seamless review, we do have these hyperlinks, which takes you straight to those specific working papers. So now we do know, and I'm sure we are familiar with this little red color. So please, if you don't have a date for Valentine's Day, this is not love. This is a literal red flag. You now need to go into your working paper and make sure that you have completed what needs to be completed, and the audit program needs to now comply with the audit plan. So see, it's quite easy, and we've made things quite seamless for you and to also manage your time and also manage your audit. So before I go into that working paper, which is 3520, action 3, it's the sign off. Has the audit engagement partner given permission for the sign off? If it's a yes, then it's a yes. Would you like to lock the revised materiality? If it's a yes, then it will be a yes. If it's a no, then it will be a no. And remember your vademecum, your Bible, your guidebook. The guidance will always be there. Your objective will show you what happens in this working paper, and also just a preview, a screenshot of the audit program and what to look out for should you ever get this red flag in here. Right, so let's go straight to our 35.20. If I click on the hyperlink, it leads me straight to my audit program. Again, we'll always say the Bible, your handbook, your guidance is your BFF. That could also be your date for this Saturday. So now the audit program itself, it divides into 6 sections. So we have the standard procedures, as we see here, and these are procedures that are generally required, okay? However, these deal with setting up the leads, etc. So normally this would be done anyway. Now we have the next 3 sections, which is the test of control. I'm just going to navigate quickly, which is the test of control. You also have your substantive analytical procedures, which are here. And lastly, your substantive test of details, your STODs. So I think I passed it. Let me just go back up. Here are your STODs, all right? So these are the standard 6 sections on the audit program. So it is in these 3, which is the test of control, your SEP, and also STODs, where you will be designing your procedures. And then the next part, if we scroll further down, after the STODs, just want to quickly show you the procedures that are relating to significant risk. So these are your fraud risk and then your business risk. Remember when Journey was showing us on your control, your system notes where you do have specific significant risk, and also under 1605, 1505, where it shows you that this significant risk, the testing of that control has been sent straight to your audit program. So this is where your procedures will come in here, and it will show those procedures in here, which will pull through from your fraud and also your business risks that have been raised on file. Okay, and below each of the control, analytical, and detailed test section, you will see that there's always a table. This is the table that I'm talking about. A table with a lot of numbers. So where any value is greater than 0, it will be highlighted. For example, here's a red. So red, remember, red means incorrect input or there's some information missing. So this is the detail from the audit plan of your level of assurance that you need to obtain for each component and stratum, if applicable, for each assertion. So the whole idea behind this is to select and design procedures to ensure that all of these values end up at a 0 or less. And the first step in the process would be to review the suggested procedures under your substantive test of details in order for you to determine whether this is being resolved or not. And then after that, you select those that are applicable to the entity that you're auditing. And for these procedures, it is possible to also select applicable stratum as well if you do have stratums. So I'm going to quickly select some of the procedures in here which I will test so that we would be able to resolve the red that's lying under working paper 18.00. So right, before I even start doing that, I'm just going to navigate. We are familiar with the headings where you have your procedure, the number, the procedure, whether you're going to perform it or not. You have your components that are applicable to this audit program. You have your assertions and the stratums, if there are stratums that you'll be using. And there's also your desired assurance level, your reference of where you did the work, which is where you hyperlink, if there are any comments. And once you have selected everything that you will be performing, remember this part where it says, was the test successfully carried out and the desired level of assurance obtained? This is you now coming back after you have done the work. So you can't have this as yes, whereas you actually haven't done any testing. Right. So I'm just going to quickly resolve some of my yellows. And remember, if I have a yellow, there's something missing. So now if I quickly go here, I have this table and I have a red under completeness in there for my analytical. So I'm just going to say, yes, I'm going to perform that. And let me see, does it solve my one? No, it doesn't. So now I'll quickly go in there and check, okay, fine. My desired level of assurance, if I put it at 2, it should actually resolve that part. So I'm not sure why it's not. I'm not sure if Jonik, you can come in and help me out. This is where I now have to contact support, because now I have selected my yes, I'm performing it. And there is also a yes under my completeness. My desired level, I'm happy with it, but I'm actually unable to resolve this one in here.
Okay, you just need to add your own procedure for trade and other receivables, because there's not an actual yes under trade and other receivables. Yeah.
There we go. Thank you so much. And I'm going to say yes. And then my trade receivable, it's a yes. I'm going to have a yes under my completeness. Just make sure that I have my desired assurance level. And then now I have resolved that table for my analytics. So now I'm just going to quickly do for the test of details. So I'm just going to set it to yes. I'm not going to test everything in there. There's just a lot of procedures in here that are unnecessary for me. So some I'll set them to yes, some I'm going to set them at no. So let's just try and do this as quickly as we can. I'm going to say that no. Most of it, I'm not going to test them. Most of it actually might be similar to each other, so I don't really want to over-test, and I don't want to keep repeating the procedures testing. So I'm going to set some to yes and some to no. And unlike me, please don't just set them to no, no, no. You actually do have to go through this and read if the procedure is necessary for this, and not just say yes, 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 just so you can get through the work and have the partner sign off, right? Because as much as we're making it efficient for you, the whole point is for you to actually audit properly, and quality do need to be met. All right. So I'm just going to quickly explain. As you can see now on my little table, after my substantive test of details, I no longer have the reds, but I do have the -3, -8, and so forth. So I just want to say that some of the values in here will be negative values, right? So it is not wrong for you to have some of the negative values. In some cases, more than one procedure may address one or more common assertions, as I said earlier. But because of the other assertions they address, they are the best procedures to perform. So in addition, even though all the required assurance has been achieved for one assertion or on an assertion, an additional procedure might be required for you to to have it in there, which now results to your -1 and -2. So you can get away with a minus, and because the whole intention is to prevent an accidental over auditing. So it's not deliberate audit decision. So if the values are very high unexpectedly, just for example, I'm going to say this -8, I feel like it's too high. So then the auditor might have selected too high decisions, and you might need to go back and check on your procedures and your level of assurance for that. And however, if the negatives are seen and I'm perfectly fine with them as they are, then you can leave them as they are. There is no need for you to do anything in them. So now I'm just going to quickly check if under my desired level of procedures, if I have anything in there that's yellow. It seems okay, and I'm happy with that. And if I just quickly go back and check my remaining, okay, fine, that is fine. And then I do have those significant risk. Remember, on the significant risk, it's your work that you need to actually hyperlink and also make that conclusion on the work that you have done for your significant testing. And if I quickly go back to 18, now no more red flags, right? I'm happy. White color, this is your assessment result. So I'm happy with everything, and I've made sure that my planning completely, it adheres to the audit plan. And now if I go back now, I'm saying, okay, fine, my planning has been completed properly, and also my audit programs have been populated and signed off. Right? Remember, now I'm trying to move my audit program from planning mode to execution mode. So if I quickly go in there, everything that's yes should be in here. And if I check, there is something that's probably not going well in this working paper. So ideally, the whole point is you will not be seeing any of the ends that are in here. You will not be seeing any of the procedures that you are not performing. So that will be the whole point of moving your audit programs from planning to execution mode. And once you're done with this and you have the work, you will then come in there and hyperlink, and then you still do need to answer these questions, which will remain in yellow until you've actually done the work. And if you've done the work, I have tested successfully, then I'm going to say yes to all of those that are applicable. And if I scroll further down, we have our conclusion on our audit program. So now this is the last action, which is the audit conclusion. So this is the part that also does need you to complete it, because you have done the work, you've done the execution of the component, and you are happy. So the procedures were customized to respond. Is it a yes or no? Then I'm going to say it's a yes. And then applicable procedures were were designed to address the significant risk. I would say yes on that. And all applicable audit assertions, that's also a yes. A reviewer sign off. If I'm a reviewer sign off, we do have our little sidebar on the far right. If I don't want to type in, you can always just use that function. And then now you do have the reviewer sign off in there. And if I scroll further down, do I have any material journals? I'm just going to put a 10. And non-material, I'm just going to say 0. And any instances of non-compliance, I'll say it's a no. And any fraud that has been identified, I'll just say a no as well. So this is ideally your complete audit program, right? And you have done the work, the execution work has been done. You did hyperlink where you have done the work, and you've also made sure that you do tell the system that the test was successful and the desired level of assurance has been obtained. And now I'm comfortable that now the engagement partner can now go and sign off this working paper, which is 1800, because there is no red flags on this one and everyone is happy. And remember, formulas do still need to remain in here because this file must be signed off by electronically by your engagement partner. So this is the part that now you're done with your planning and you're happy. And now we can now go into execution mode. You've done the execution. You're also happy. Then now I just want to look into my other items that might be remaining. So Jenny is going to come back and quickly show us the standback working paper and also our audit sign off working paper. Thank you.
Yeah, thank you, Matsevo. Hopefully everybody understands now. Okay. Okay. Now we get to this lovely stand back working paper. All right. So if you do not know where we got this from, we do get it actually from the standard. It's ISO 315, paragraph 37. Now, what it actually says is if the auditor obtains new information which is inconsistent with the audit evidence on which the auditor originally based the identification or assessments of the risk of material misstatement, the auditor shall revise the identification or assessment. So basically, what it says is that if we learn something new during the audit that doesn't match what we first thought, we must update our risk assessment and we can't just stick to what the original view was. Okay, so if you look at the implementation guide, right, so it's implementation guide for the ISO 315, paragraph 95 to 96, which also addresses paragraph 36 on the actual standard. Towards the end of the audit, the auditor must pause, they must stand back a little bit, and then just reassess their risk conclusions. So they should check that the risks identified across all major financial areas still make sense on everything that they have learned thus far. So they must also make sure nothing important was missed, especially material accounts or disclosures that were originally flagged as risky. All right. So just to recap, the auditor needs to revisit all areas, whether it's material by size or nature, and even if they were not identified as significant, even if they weren't linked to a specific risk, or even where they weren't tied to a relevant assertion. Right, so basically you need to assess all of it. So this also ensures that nothing material is missed just because it didn't seem high risk at first. Okay. Now, how is Draftworx going to assist you? Well, very simply, we created a working paper. I've been talking about it all day, but definitely we added a working paper for you. Okay, so let's dive into that working paper quickly. Okay, so you're going to see it's going to be quite familiar to what we have already seen today, right? You will see, like I showed before, it does populate under each section as well. Right, so now, again, this is where you're going to grab a cup of coffee or even a drink, depending on how much the risk response tortured you, all right? And then you're going to sit back and see if there are any potential problems that may unfold. So if there are any other risk of material misstatements that you may need to address and design appropriate procedures on. All right, so please grab a drink and let's go through this specific section. All right. Okay, the very first question it's asking us, before I address the first question, we now take whatever you did on 1605. So remember the flow. We go to 1505, we raise our risks. From 1505, depending whether it's significant or not, it will either go directly to the audit program or 1605. Now, everything on 1605 will pull through to your audit program as well. So eventually everything will get to your audit program. Okay. Please don't confuse this with the change in audit approach. This is above and beyond of what happened on your audit program. All right. You need to balance out your audit program before you come here. So if you now have on the audit program, let me just show you. If you still have procedures that is showing you that there are still things that needs to be done, you need to either go and have a look on your working paper. So for instance, here I indicated that my test failed. So here I need to do a change in audit approach. All right. This has nothing to do with the stand back assessment. You need to balance this audit program before you move on. Now, either something may not have been completed. You could have, for instance, just have a little yellow over here. Hopefully that's not the case because obviously you need to document what you have done. it's not documented, it is not done. All right. So when you do a change in audit approach on your audit program, so everything on 1605 pulls to 1705, which is your audit plan. This needs to balance here, right? If there's a change in audit plan, you will come on the tab that we provide for you, and you'll come and add your procedure. All right. And then you will address this here. All right. This is where you balance your audit program. The standback assessment is over and above of what happens here. All right. This is where you literally stand back and have your drink, talk about all of the torture you went through your audit, and then you decide, I saw this and this and this. Let's just raise the risk. Okay. So we do pull in these levels from 1605, and then we ask you, is the risk assessment for the financial statement line item still appropriate, and have all the risk of material misstatements relating to the assertions of the financial statement line items been identified and assessed? Yeah, so if you say yes, you can still drink, all right, and then you can move on, right? No work further to be done. If you do have an item where you said, you know what? No, things looks a little bit sketchy over here. We still need to do some work. You can say then no. And there now we ask you, okay, raise your risk. So this is where you're going to raise your risk. So this is kind of like your audit program for all of the risks above and beyond. So let's raise one risk. Okay. Then again, remember in 1505, we said likelihood and magnitude. Again, you can come and assess level 1 to 4. Let's just do that again. And then you allocate your assertion. There you go. Now what you will see what happens, it gives us a comparison of what happened in 1605. Then it tells us, listen, you have a revised level now. You still need additional assurance of a level 3. So we don't give you, we are almost done. Please give 10 minutes, then we are done. We are going to then document quickly. All right. So you can't go and document if you did not raise the risk on a specific assertion. All right. Then you need to go and document your procedure. So remember, this is now your new audit program for these risks. So add your procedure over here. Okay. Again, what level do you have for this procedure? Let's say 3. Assertion is going to be accuracy. And then whether it has been tested successfully. Right. Reference to the work that you've done, and then conclude whether it's successful. Right. You need to balance this. So let's say yes, and then there you go. The balance disappears. Right. Now, what happens if you have a significant risks? We cannot really give you this table because obviously, like I said before, all of the significant risks just go directly to the audit program and does not pull through to 1605. I'm going to just raise risk 2 then. As an example, allocate it as a significant risk. All right, just any assertion. And now we ask you again, please add your procedure for that significant risk. So you will see there's 2 different sections. So action 2A and action 2B. A is for the significant ones and B is for the non-significant ones. So again, you add your procedure. You will indicate the level 4 hopefully, and then there you go. Reference to the work that you've done, and then say yes. All right, now you're happy with all of the risks that has been raised above and beyond of your audit program. Very important, the manager or the partner needs to declare that they are happy, make the declaration, and then the audit partner needs to sign this off. Okay, let's sign it off. Right, then that is that for the standback working paper. All of your components applicable to your audit will also pull through here, and then you can indicate whether there's work to be done. Now, this has to be done, all right, because when you get to 0605, last document. So I'm not going to go through all of the finalization documents. Again, this is our control document. Everything that happened in the audit is actually on 0605. So the partner will have to review that document because he's going to see a nice summary and a nice overview of what happened in the audit program. There are, again, please refer to your Bibles, right? Especially on the schedule for identified misstatement. We have actually a very detailed video on how to complete that. I know that is a very big working paper, so we will be here for 3 hours if we discuss that. But let's just lastly quickly go to the audit control sign-off, and then we can say goodbye. All right, now you can see this audit sign-off control sheet. All right, so again, all of the documents that we listed is here, right? We indicate to the partner if the work has actually been done. So the partner can see, yes, yes, and then you can go back to the person responsible and say, you know what, I see this is not yet done, all right? Please, maybe we should just revisit this. Then you will see what we have done is we have brought in the standback assessment as well, and we will also indicate whether it has been signed off and what happened in that working paper. Right, so you can see also now here there is an indication for there's a change in audit approach, and it's the one that I did on our audit program. Right, so it's important to note standback is not the same as audit approach change. Okay, that is basically what changed on this working paper. It still is the same. And then the other exception, so you can see all these red little Matsebo's Valentine's dates are actually also here, waiting in a row for her. Right, and then at the bottom, we have actually now added, especially for the partners, a archiving sign-off. So remember, the audit files needs to be signed off within 60 days of our audit report sign-off. So the partner can now actually communicate and say, you know what, this has actually been ready for lock. Please lock it down, and then also. We have also added scribes. So just thank you to Noella and Nicole. Just a shout out to them. They have assisted us on these slides. So it's scribes where it gives you a nice little training on how you can actually archive from our local or server or even from WebSync. So please click on it and then you'll see how to actually archive. Please remember to archive your files within 60 days. Right. And then that is the conclusion on RAC. We have left the best part for last. All right, so I'm just going to unshare my screen, or rather just go back to my slides. Right, just so that if anybody wants to go back to scanning our QR codes, and then we can all switch on our cameras just to say goodbye. Right. Again, thank you to everybody who joined today. We really appreciate everybody that's here throughout this entire webinar. Thank you so much for everybody who joined. Clarissa, thank you for sitting in. Shane, thank you for sitting in. Last but not least, Mutebo, thank you for assisting me today. And then all of the other presenters that were on the cloud, the desktop, last week's XBRL, working papers, thank you so much to everybody. And lastly, it's our clients that makes everything possible. Thank you so much, everybody. And we are hoping to see you again next year. And please, please keep in touch. Please use these QR codes and get in touch with us. All right. Have a good afternoon, everybody. Thank you. Thank you. Thank you. Right.
Thank you.
Hey, well done, ladies. There's not much to add to that. Well done, Joni and Matsebo. That was fantastic. Thank you, Clarissa, as well. And then, of course, thank you to each and every one of you for joining us and for all the hearts and claps that are coming through right now. You make us feel really, really good. Enjoy the rest of your day and take care, everyone. Cheerio.